Okay, folks, we're going to start covering the mid-cap funds. Mid-cap funds are normally companies that have the value of their stock is between $2 billion and $10 billion. So that normally defines a mid-cap company. Let's get started. Let's check the performance for mid-cap stocks. Let's see here. So year to date, they're like a 24% return. The 1 year is a 10.53, 3 years a 13.38, 5 year average is a 9, 10-year average is a 15.2, and since the fund inception is a 10.4. So let's see how that compares to the benchmark S&P 500. See how it compares to the S&P 500. See how it compares to the Russell Midcap. So you see, so far this year's behind the Russell. It's ahead of the S&P 500. For the 1 year, it's above the Russell. It's a little bit above the S&P 500. For the 3 year, it is a little bit above the Russell. It's below the S&P 500. For the 5 year, it is below the S&P 500, a little bit above the Russell. For the 10 year, it is a little bit above the Russell, a little bit above the S&P 500. And since the fund inception, it is actually doing better than the Russell and the S&P 500. Remember, the S&P 500 is the global. Okay. Let's see what else we got here. Okay, the calendar year returns for mid-caps. Okay, so the mid-caps finished at a minus 8%, which was a little bit better than the Russell. It wasn't as good as the S&P 500 for last year. For 2017, you see the mid-caps are almost even with the S&P 500. They're beating the Russell. 2016, they were well below the Russell and the S&P 500. 2015, they did better than the Russell, not as good as the S&P 500. 2014, they weren't too far behind Russell and S&P 500. 2013, they actually did better than the Russell and the S&P 500. 2012, they actually did better than the Russell and the S&P 500. 2011, they weren't as good as the S&P 500 or the Russell. 2010, they were better than the S&P 500, not as good as the Russell. And 2009, they beat out the S&P 500, not as good as the Russell. Let's look at the last 10 years. The last 10 years, if you started with a $10,000 investment, if you had it into the Russell mid-cap, it would have been about $41,000. It would have grew from $10,000 to $41,000. JP Morgan mid-cap, it would have grew a little bit more, maybe $100 more. S&P 500 is about $700 less than the JP Morgan mid-cap. Let's look at fees. Fees are very important. So what it looks like is, okay, so make sure you look over the fees. This tells you how much they charge per $1,000 that you have invested. It looks like they're going to charge you $7.70 for each $1,000 that you have invested. So fees are important. Make sure you read over this if you want more details. but you want to make sure any gains you get for the year are well more than the fees that they're going to charge you to be in the fund. All right, let's look at the portfolio. The portfolio is next. So remember, these companies, the value of all their outstanding shares of stock are between $2 billion and $10 billion. So you got like a JP Morgan money market fund. You got Ball Corporation, which is like 1.5%. Synopsis, Global Payment, Waste Connections, CMS. They're all about 1.25%. Total number of holdings in this portfolio, this fund, is almost 200. And then for this fund, almost 97% of it is in stocks. 2% is in fixed income, and the rest is in cash. These are the industries where the fund, the percentage of industries in the fund. You got information tech, financials, consumer discretionary, industrials, healthcare, real estate, utilities, material, energy, communication services, and consumer staples. 97% of the stocks in this fund originate from the United States, some from Europe, and a little bit from Asia. Management. You always want to pay attention to the management. So I think the management of this fund is JP Morgan. You want to pay attention to the management group. You want to pay attention to the management objective. So the fund's objective is long-term capital growth. You can read the strategy on it. The risk. Remember, there's about 200 stocks in this fund. So it's not as risky as any individual stock. Unless the market is falling, it's going to be very rare that all 200 stocks in this fund are going to be decreasing in value. So over the long run, it does gain. Unless everything in the market is falling, this fund will gain. All right. So pay attention to the name of the fund. It's a JP Morgan Trust, JP Morgan Mid Cap Equities Fund. So if you hear of JP Morgan being in trouble, which is highly unlikely, you want to make sure you get out of this fund and get it to somewhere safer where your money is going to grow. You can also see the fund manager, the fund managers. You can see the management company. You can see their address. And then the mid-cap core funds that invest at least 75% of their equity assets in mid and small size companies in the United States. Okay, what else do we have? Okay, this video, I won't go over the glossary. I'll go over all the glossaries in most of the other videos. But if you watch some of the other videos, I don't want it to repeat too much. So you get a chance, look over everything in the glossary. If there's any terms that you don't understand, you can always Google them if you want a better understanding of it. But that's going to end our video on mid caps. Next up, we're going to have large caps, and then we may do internationals after that. And that should wrap up. Sometime this summer should wrap up our tutorial series. It was just meant to give you like a just intro, so you know a little bit about what you're trying to invest in. Like, comment, share, subscribe. Thanks for watching. Later.